It's a new era for regulating foreign investment across the world's second largest economy, at the heart of China's new foreign investment law, providing a more level playing field for domestic and foreign firms. And though the ongoing coronavirus pandemic will continue to have unknown consequences for the global economy, the landmark legislation is expanding more areas for investment in China.
It allows for our market to be more and more open, alongside a quicker opening up process. Previously, certain areas were not open to foreign investment. Now, with the new law, it has become more accessible, except for the negative list. When foreign businesses come to China, they'll bring their own experiences and will benefit domestic enterprises. In fact, you may be at a disadvantage if you don't compete with them.
Zhu Leiyu, an NPC deputy and law firm director in the southern Chinese city of Guangzhou, also believes that the landscape for foreign investment in China has yet to reach its final stage.
I think the creation of the Guangdong Free Trade Zone is a good example promoting the implementation of the law. I think more FTZs can be set up nationwide, and the negative lists, I think, could be smaller and reduced so more industries can receive foreign investment. This will benefit the opening up process, promote economic development, and increase competition.
At the same time, the updated legislation aims to keep China as an attractive investment destination, while also addressing concerns raised by investors. Reducing red tape and improving the ease of doing business could help the nation rebound in the post-pandemic future.
One of the biggest improvements has been, and it's accelerated most recently, is reducing the cumbersomeness, the bureaucratic cumbersomeness of registering a foreign invested enterprise. And that has been simplified a great deal. Intellectual property, trade secrets, notarizing and legalizing documents for judicial proceedings. It has many wonderful provisions that are steps in the right direction. But we haven't been able to see the fruits of all of that because of the present situation. But I think anyone who looked at it objectively would find it, and certainly our clients have found it when they looked at it, to be a positive step, very positive in the right direction.
Despite the welcomed progress, some legal experts, especially those providing legal and consulting services to potential foreign investors, say more fine-tuning could bring even more businesses to China.
For example, in the United States, if a Chinese entity comes and sets up a corporation in the United States, we don't call it a Chinese invested enterprise, we call it a company. And so there should be no differentiation between foreign companies and registered invested companies and Chinese companies. Now that doesn't mean that China can't restrict areas that it doesn't welcome foreign investment. It certainly has the right to do so. But in the areas that it permits it, there should be no differentiation between a foreign invested company and a Chinese company. And that's something that we should strive towards.
In the first quarter of this year, foreign investment into China fell by a staggering 10.8% compared to 2019, exposing the harsh effects of the coronavirus pandemic. Despite the significant transformation of how foreign investment is conducted in China, it may be quite some time before the real benefits are felt both by investors and the wider economy. Omar Khan, CGTN, Guangzhou.